Good morning, good afternoon. It is Sunday, the 7th of March. Interesting week last week. I haven't been doing enough videos really for my subscribers because markets have been trading sideways for such a long time. Not really an awful lot to say. We were just sort of scalping levels and doing whatever we needed to do to make money, but things have started to trend, I think, which is more interesting, and I should step it up and do some more videos more regularly. So here we go. I did one Friday, I'm doing one Sunday again. I'm going to look at the 10-year T-note yield. As you see, yields climbing, and not only climbing, but accelerating through March as we've rocketed over the past week. You can see we broke above this big fib level at 101. Market had really been holding just below there. Once we broke through it, nice support level. Of course, support becomes resistance becomes support once it's been broken, and off we go. Like really accelerating now. Really strong trend. This is the weekly chart, of course. So that was January where we retested that and then rocketed up through February, and now March accelerating again through March. So looking at it on the daily chart. We hit a high on Friday, 162.50, beating the February high of 161.40. Yes, we did pull back a bit, but I don't see any reason why this is no sort of sell signal. I don't think this is a double top. So I think the outlook remains quite positive. As you can see, the channels are sort of accelerating as well, faster moves to the upside. We broke above the 500-day moving average on the yields, and that certainly acted as a really good support level once that was broken. So all in all, looks pretty positive to me. I'm guessing that these higher yields are a factor in what we're now seeing in the US dollar appreciate. Took a long time for us to break through this 3-month sideways pattern. Initially failed at the 100-day, and the Fibonacci resistance only had a 2-day pullback, and then boom, we're through it. So Thursday was our big buy signal. We were jumping in. Well, I had us jumping in as soon as we traded 91.40. No point messing around. It looked pretty clear to me that this was going to run. So we were selling the Aussie dollar and whatever else. And now Friday, good follow through. Didn't close at the high of the week, which is what I would have liked to see, but we weren't far off it. What was the high? 92.19. We dipped back to 91.97. Nothing serious. Weekly chart, yep, looks pretty positive. Can't see a huge amount of resistance. A little bit of resistance here around 91.93, but we did get above there, and we did close above there, so this looks positive. There's nothing really else to say. I'm a dollar bull, no question about it. My target for the index for this week would be 90. Ooh, what's this now? 92.45, 92.55, I think looks achievable. This is the 200-day moving average here, which is declining. So I guess by the time we get there, it'll be not too far above. I don't know. It'll be probably around, what's the high of this candle? 92.80 or something like that. So that would be the level to watch. So two obstacles here. Wouldn't be surprised to see the 200-day moving average cap this week, but that's quite a long way away. So let's see if we can achieve that target. So Aussie dollar we were shorting, looks good. Friday we took a tumble, although we did meet support at 76.20, 76.10, and that held spot on. We had a bounce back from there. Just going to have a quick look at the weekly chart. No, not telling us much. We did get that big bearish engulfing candle the week before. More of a doji this week, to be fair. But let's have a look. So yeah, we had a big dump. I'm just going to show you the 4-hour chart. So we've got the 500 period moving average on the 4-hour chart, 76.20, coupled with, I haven't put the fibs on the 4-hour chart. The daily chart has the 38.2% fib at 76.22. So that's the reason we bounced off there. There's nothing on the weekly or the daily chart really, well, apart from the fib obviously, to suggest that this is going to bottom out permanently. There is this trend line as well, so good support down there. And it has held. However, I think this is a developing bear trend. So eventually, I think we'll break below there. And once we do, that will be quite a significant sell signal. And I think that we'll move quite quickly towards 75.40, 75.30, which is the bigger 38.2% fib, the more longer term 38.2% fib, coupled with the 100-day moving average. So these, the 76.30.20 level and the 75.40.30 level are the key levels to watch this week. I will put the resistance levels in my daily reports. Obviously, I don't want to dwell on those too long. We haven't got too much time. Okay, New Zealand dollar, well, not engulfing candle, but big shooting star, and then another big red candle last week indicates the bears are getting control of this market. Look at the stochastics at the bottom there, turning negative. So this does look negative. This trend line was broken Friday. This to me looks like a sell signal. What else can I say? We bounced just above the 100-day moving average. Nothing really bullish about this at all. Nothing to indicate this is going to turn around and go higher anyway. So the trend line at 7200 is the important factor. As long as we stay below 7200, this outlook is negative. I'm looking over myself at short-term charts. Actually, I could just show you a quick hourly chart. So with the hourly chart, we've got the resistance at 71.80, 71.90. Trend line just going back there to the beginning of February, coming right in at that level. So that looks like the first important resistance level. Another resistance level at around 72. I call it 72.30, 72.40. That looks like a bigger resistance level, but I don't think we're going to make it that far. Okay, euro also looking pretty negative. Not a surprise when you see that US dollar index through the roof. So once we broke the 100-day moving average at around 120.38 and that trend line going back, well, wherever it goes to, there we go, to the beginning of November. Once we broke that at around 120.50, 120.40, the market plunged. Not a surprise. Broke this previous low down here at 119.90 as well. And then further losses on Friday as expected. So we managed to jump into short positions on that euro, and we were selling breaks and selling breaks, which is what you're supposed to do as the market trends lower. If we move to the shorter term chart here, obviously not much of a bounce. Really, you can see on the hourly chart, not much of a bounce at all, actually. 119.17, we're only about 20 pips, 20 to 25 pips above the low. A bit surprised actually. The Aussie, the New Zealand dollar, and the euro versus the US dollar all had quite significant bounces initially on that jobs number. Stronger jobs number, more jobs created in the US than expected. So initially we plunged, but a very strong recovery. A bit surprised at that strong recovery, to be honest. But there you go. That's what happened. Anyway, doesn't change what I see as a negative outlook for the euro versus the US dollar. Looks like we could test trend line maybe down here, 118.50 with 200-day moving average at 118.20. So let's see where that intersects by the time we get down. There might take a couple of days. Maybe it'll be 118.40, 118.30 eventually that we get to, maybe midweek. Clearly, the 23.6% fib at 119.40, 119.50 has held. That's a more minor resistance level, but certainly holding, probably because we're in a bear trend, so minor resistance levels tend to hold. If we got higher, we've got 119.70, 119.80, which looks like a pretty strong resistance level. We're very far below the 1 hour moving averages, which are all crossing over each other, giving us sell signals. And I can tell you on the 4 hour chart, we've got moving average crossovers giving us sell signals on there too. So all in all, I think the euro is going down versus the US dollar. Cable pound versus dollar, we're also getting sell signals from the moving averages on the 1 hour chart. As you can see, 100 crosses to 200, 100 crosses to 500, 200 is now turning lower. So this all looks pretty negative. Resistance from this little trend line, it's not a significant one, but there you go, 138.70. 138.71, 138.85 looks like resistance, and then you've got all the moving averages which are going to be getting in the way. We've got a short-term downward channel about 2 weeks old on the hourly chart. Back to something more significant, the daily chart, a bit messier, it's a bit harder to read. Trend line going back just to middle of December was tested. We overran it, but then pulled back above it, closed above it. This is a little bit harder to read. It certainly doesn't look quite as negative as the other charts. The other thing we've got to watch for is, so we had this rising wedge pattern which we broke out above, and it really looks all very positive. And then of course the week before last week we did rock it again, but pulled right back, closed lower on the week, leaving a big shooting star candle. That's not positive, of course, and so not surprised to see this last week us turning lower again. But we've got the upper trend line to this very important 1 year rising wedge, and that comes in at exactly 137.80, which is probably right. Yeah, pretty much is. So we hit that and that was it. That's the big support level. So we've got to watch what happens here. 137.80, 137.70. There's quite a few trend lines I've got on here actually. So there is quite a bit of support. Now this trend line here, let's have a look at that one. This one is quite interesting too. This is joining some major highs, the two big highs in 2019, and that comes in just a little bit below at 137.40. So although I feel that this is probably going down, just because I feel the dollar is going to rocket and the other currencies look quite weak against the dollar, we do have quite significant support levels. So it'll be interesting to see, even by the time we get down to 135.70, 135.60, by the time we get there, this 100-day moving average will have edged significantly closer, of course. That's a big support level, but anyway, that would be the target if we were to get down below 137.50. That's the 50-day moving average. To break below 137.50, I would suggest means that we've broken some of those important levels that I've shown you on the chart. On the weekly chart, I'm waffling here a little bit because I'm slightly it's a bit difficult to decipher because we've got this trend line down here at 137.40. So we'll just have to see if we start to break these trend lines. What the bears really need to see is a break below 137.00, but obviously that's a long way away. So we'll just have to keep monitoring that situation. Dollar is through the roof against the yen. That's expected to continue, but just look out because we do have quite an important trend line and 200-week moving average at around 108.90, 109.00. That is the big level for the week. There's nothing else that really matters. Wouldn't be surprised to see it get up there, but that will be the major challenge. Watch for a high for the week there. Now, we know the euro is weak and we know the yen is weak, and what is happening with the euro yen, therefore, is it's mostly trading sideways, still in a bull trend, so I wouldn't want to be short. I don't see any particular sell signal there. Maybe the yen will weaken more than the euro and we will continue higher, but that's it. No strong opinion on that one. Same thing happening with the Aussie. Obviously, we know the Aussie's weak. The Aussie did take a dump against the yen at the end of February. We are struggling at the 500-week moving average, which is down here at 84.30, 84.40. We've obviously spiked above that and pulled back, negative candle the week before last. This one's a bit better. I would just watch that 84.30, 84.40 area, but again, not a really strong opinion at the moment. The Canadian dollar versus the yen looks better. Canadian dollar strengthening last week against the yen. We've got not only 38.2% fib resistance up there at 86.27, but we've also got the 500-week moving average at 86.20. So that is the major level. That is the one we have to watch this week, especially if you're long. We'll watch for a negative pattern there, see if things reverse. And that has reminded me that I need to look at the Canadian dollar because I was very bullish on this. I really thought we were going to break above this trend line and moving average. We did, but it was not sustained. I was even buying on a break above 127.00. Now I'm actually long, and this is not great because we dipped back a bit. I'm not majorly long. And that isn't the kind of candle formation that I was looking for on the day, a shooting star. So I'm slightly confused with this because I did see the dollar moving higher. We've got some support on the 1 hour chart here. And this really is going to have to hold. It is at the moment. We've got the 500 and 100 moving averages, which seem to be offering us some sort of support, and this very short-term 1 week trend line. So we really got to stay above 126.20, otherwise risks increase to the downside for the US dollar versus the Canadian dollar. And obviously we do need to get above, if you don't have a position, a break above 127.10 really should be positive for this week. Again, surprised to see that reaction, but some Canadian dollar strength there. Okay, that's it for now. I'm just going to show you my website in case you are looking at this after the event. I'll show this video a little while after the. I'll show this video after a day or so after the subscribers get to see it, but I'll put it on YouTube for everyone else to look at. And if you are not a subscriber and you'd like to look at my website, daytradeideas.co.uk, it gives you lots of information. It gives you all the markets that you can subscribe to. You can contact me on here as well. Contact me directly. I've got my email address. I've even got my phone number on here if you need to speak to me about anything at all. That is loading now. There you go. There's my phone number, my email address. You can fill out the form. You can contact me on Skype. And I'd also just like to show you the online training course. I get a lot of inquiries about this. I've cut the price, the whole COVID situation with everyone stuck at home. This really is a very good course. I get fantastic feedback for this. and I've cut the price to 199, 50% off at the moment. So it really is an opportunity that price will not last much longer.